would you say this is a full? The question is this a foolproof method of making money,
No, God, no.
or a route to the poorhouse?
Neither extreme necessarily. I would say this: people have to keep in mind there's no crystal balls in FX. No one, literally no one, has access to information that anyone wouldn't have access to rather. And the thing that I would be wary of when it comes to following gurus is that some of them can have two portfolios up, and they can do the exact opposite strategy in each portfolio. One's going to be a loser and one's going to be a winner, and then they just go out and promote the winner. And everyone jumps on board with that, saying, "Oh, I'm following a guru. This guy's got a surefire track record," when really he's got no savvy, at all.
Right.
So I think people need to be wary of that. That's not to say that there's not some very legitimate and a whole lot of very legitimate strategies and experienced traders that you could be following and feeding off of. I would just encourage everyone to use their own discretion. Follow the markets yourself, question the strategies and the trades that are being put on, and above all, apply the risk parameters that are appropriate to you, your portfolio, your comfort level, what you can still sleep at night, risking is what I would encourage everyone to do, especially the ones that are following it.
So be aware of your profile, really, as a risk, your ability to analyze and sleep at night with.
Blind faith is a bad thing in the trading world. Don't just follow anyone blindly into a trade. Do your own analytics. Read the headlines. Determine why he or she is entering this trade. Why he or she has stop levels and limit levels at the levels that they do. If you agree with that, then great. You got some insight that you may not have gotten had you not been following this trader. If you don't agree with that, then don't place the trade, or place it with your parameters in mind instead. Like I said, and to reiterate, there is no crystal ball. It's not like any of these traders have foresight into the future. They're trading on either a gut instinct, a back-tested strategy, whatever it may be, and that's all information that you or I would have access to as well. So,
are you a fan of back-testing?
I am, yeah. I think, again, just to refer to what I was talking about previously, it helps eliminate the emotionality of trading. So if you've got a strategy that you're comfortable with and you back-tested it through a couple different market scenarios and market extremes, volatile markets, more flat markets, at least you go into each trade with a little bit more comfort and confidence, saying, well, this has worked in these strategies and these market environments in the past. And it helps eliminate some of the emotional aspect of, I'm in a losing trade, I got to get out of this, I got a tea time in an hour, so let me double down now. You know what I mean? Make up what I just lost, and then I can go off and do my 18 holes.
And sort of iron out the extreme events as well.
Yeah.
The spikes.
So I'm a fan of backtesting. I'm not a fan of religiously marrying strategies, because market conditions do change. And you've got to be aware of that. You've got to be making adjustments because of that. So there's a fine balance between staying disciplined on what's worked in the past and what you've seen and experienced through different market conditions and adapting. And that's not a balance that I can hand someone and say, here's the equation. Nor you or nor anyone else. It's something that you've got to develop a gut for.
And from the educational side of things, identifying trends is probably more, or equally as important.
Yeah.
Another thing that everybody's talking about, binary trading.
Sure.
Is this a passing fad or here to stay?
I wouldn't even label it as a fad. No, I don't think it's here to stay. Binary trading is essentially trading options. It's probably sugar-coated or retailified, for lack of a better word, just kind of dumbed down options trading. The reason options are popular in the equities world is because it allows you to take a substantial position by only putting up a little bit of money, which is leverage, essentially.
Yes.
In FX and CFDs, you can extend leverage already naturally. And the transaction costs to just entering the spot market are significantly less than entering an options market. It's more liquid on the spot side. It's a lot more transparent on the spot side. When you get into these kind of esoteric binary options, where you've got an if-then or if-or type scenarios, those aren't liquid instruments. You're specifying it to your needs, which means you've got one level and one quote to reference. In spot, where it's the euro dollar, you can go to a million different vendors and find out what the spot rate is. So no, I don't think binary options are going. I don't think they're all that popular right now. I know that there's some firms that offer them. We've done it years ago, and they never really took off. Retail traders are smart. They can price it both ways. They can say to buy or to write it. They'll see a significant spread there and say, why would I mess around with this product? I can just trade spot, where the spreads are a pip, 2 pips. You know.
So maybe binary is just in a bit of a purple period at the moment because of the wider global economic
I think,
situation. It's
yeah,
making it more attractive.
And I think at times it can make it more palatable to a newer investor, a newer trader, where they can say, okay, I can understand that if the euro breaks out, above 130, I make my $100. If it drops below 115, again, I make my $100. And that's, to get your head around, that's pretty easily digested. But for the more savvy trader and the ones that over time kind of get it, they'll quickly say, well, I'm paying more in transaction costs here. Why not just go long euro dollar or go short euro dollar? So I don't think binaries have legs. We're not looking to reoffer them. It's not a part of our strategy. I don't see it taking off that much.
Interesting. So what would you say is the most important consideration when selecting a technology provider?
Good question. To rephrase the question a little bit, when it comes to the considerations around a brokerage firm that you're going to deal with, that conflict of interest is the first thing I would look at. So in other words, what happens when I click buy? Do you book that trade? Are you sitting on the other side of that trade, or does it go through on an STP, a no dealing desk basis, to your liquidity providers? So that's the first thing I would look at. The second thing when it comes to choosing a broker is, the customer service levels. Before you open the account, call them a couple times. Call them at 3 a.m. See if the phone gets picked up, if you're on hold for 10 minutes. Know what to expect. You'll learn, rather, what to expect when you do open a live account as far as the service that you'll get. Resources, as far as education, as far as research, as far as charting packages, trading